Bitcoin bounces from technical support. The question is, will the RS flip hold? That's a big question. That's a big if. Hey guys, hope everybody's having a great day. It's Keith Allen, and I'm pretty excited about what's going on. You know, in my earlier analysis this week, I spoke about potential test of resistance, a shakeout going on, and wondering if we were going to get that test, and what level was actually going to get tested, and well, we actually got kind of a best case scenario out of the test. Where it goes from here, well, that's what we're going to kind of climb into here in this analysis. I'm going to show you some of the confluence and correlations among the technicals, and I am going to identify how the order book and order flow data in FireCharts can give us some insight as to whether or not the RS flip is likely to hold. So let's start out, I guess, with the candle chart, so we can look at the retest and the technicals, and then we'll climb into the order book and other aspects of what's happening in the market right now. We did also have a dose of economic data come out today, et cetera, et cetera. So we'll climb into all this today and see what we can figure out. Looks like I'm actually on FireCharts here. Let's head over to this screen first. And you can see, let's get that taken care of. Okay, so we're going to look at this in a couple of different time frames. Here on the weekly, you can see, and we discussed this in our earlier analysis this week, we've been consolidating above this 21-week moving average. However, there's just been, there's not been any full candle bodies above that level until this week, right? Even last week's candle wicked below just briefly. So that's a positive that we're above this. And obviously this doesn't validate until we close the week, and hopefully this week and the remainder of the month stays above this level. And that would be a validated RS or resistance support flip for me. Now let's take this to the daily time frame and see exactly what happened here. And this is what I was talking about in the analysis the other day, is that, we've got this 2021 mid-cycle top. That's where, distribution really started before we got to the all-time high back in 2021. That's where the dip came from. And then boom, we rallied back with that distribution rally. But that to me is significant, right? So this mid-cycle top was a level I've been watching. And at that time, the 21-day moving average was just a little bit lower. And so for me, the 21-day moving average was more important than the mid-cycle top. I felt like we didn't have enough liquidity at the mid-cycle top at the time to hold things up there. So I was expecting, or at least concerned that not concerned, but thinking that price would go just a little bit lower. Well, yesterday, price went to exactly 65,000 here, at least on this exchange, 65000. And as you can see, the mid-cycle top is just sub 65K. So I'm calling this wick a valid retest of the 2021 mid-cycle top. And, and this marks a potential resistance, RS flip here. Now, today, moving average is by definition moving, and that moving average has now moved slightly above that 2021 mid-cycle top. I'll tell you exactly where it is here on this exchange, and these numbers are going to vary slightly from exchange to exchange. 64,940. Yesterday we went to 65,000 even. So at this point they are perfectly correlated, in my opinion, and holding an RS flip above this level is inherently bullish, right? So to me, the fact that we didn't wick through that mid-cycle top is a sign of strength, and that is even stronger than if we had gone down to the moving average, right? So both are holding here at this point. So what's next? Obviously, after wicking into that, above 69, which is the 2021 top, that's very strong technical resistance, whereas we have more liquidity actually at that 70K mark. So everybody's had their eyes on 70 when 69K has been a real contender. It's been a real contender since we first engaged with that level. I mean, we've got dozens of rejections. We've talked about this many, many times before. So yesterday when we got this test, and then it came in with new trend precognition signals in both the A2 plus algo, that's the arrow here, and the A1 algo down here, that was an indication that, hey, we could move up here today. But there was some concern that maybe the economic numbers might kick us back a little bit. Well, the jobless data came out this morning, and the initial claims actually cooler than expected by quite a bit, right? 247 was forecasted. We ended up at 227. Continuing claims were a bit hotter, actually, and the 4-week average was also, the 4-week average was actually pretty well aligned with the forecast. Now, a lot of people were speculating that, gosh, we just had 2 major hurricanes come through the southeastern United States. Florida got hammered. North Carolina got, devastated, or areas of it did. And Georgia had some pain as well. Most of the destruction, at least the catastrophic destruction, was in Florida and in North Carolina. Not really densely populated areas. Some of them, I don't know. I haven't looked at the entire map. Obviously there's some areas that were well populated, but we're not talking about major metro areas like Miami. Tampa, St. Pete had some pain, no doubt about it, but a little further south into Treasure Island and Minnesota Key, for example, in Florida, got beat up. Up in North Carolina, Chimney Rock is kind of a resort town, but a very small one up in the mountains. Asheville is well populated, but it's not a big city. It's not a big city like, say, Charlotte. So there's no doubt some people impacted by that. But what you need to understand in terms of these initial jobless claims here in the U.S., and a lot of people don't realize this, is you need to be unemployed without pay for 3 weeks. So before you can file for unemployment benefits. So it's just now been 3.5 weeks since Hurricane Helene, which is the first one that hit, the one that was the most devastating, and only 2.5 weeks since Hurricane Milton. So those folks who are impacted, some may have already filed, but there's obviously some major issues going on with a lot of folks who may not have water or electricity still. And so those processes may be lagging a little bit. In other words, next week's report could be worse than this one. We do have, however, some holiday seasonal hiring that might offset some of that. That's a bit speculative. We'll see. But I think what's really going to be telling, we've got a weekly close coming up this week. We've got a monthly close coming up relatively soon. And then we have an election. Okay. So interestingly, our monthly close is going to happen on Halloween, right? Thursday. And then on Friday, November 1st. So this is now, a week from tomorrow. We have unemployment numbers coming out. And a hot number is not going to be well received. A cool number will be well received. And you know that the current administration would like to see a cooler number leading into the election. This is just now 4 days before the election. So these non-farm payroll and unemployment numbers are really going to be closely scrutinized. Of course, Thursday we also we'll have that jobless report and PCE coming in. So Thursday and Friday are going to be big days, no doubt, and we could have some volatility around those. Of course, as the saying goes, liquidity dampens volatility, and as you can see, we're running into some resistance here at 68K. Not a ton. What's that, about just shy of 13 million? It's significant, but it's not an abundance. But what concerns me here, people are like, okay, we bounced from here, so that means we're going to shoot through 70K, right? Well, look what's happening here. As we can see in the order book on FireCharts, we have liquidity actually stacking at 70K. In other words, resistance is gaining strength. Now, it's also good to see that we have bids stair stepping up. That pushes price up and running into a bit of a barrier here at 68K. We could conceivably go back and flirt with these levels again, but I will. I'll be surprised if it happens. I'm prepared for it to happen. I'm very happy for price to go up, right? I did, as I mentioned on Blockchain Banner on Tuesday, I was looking to buy that dip to the mid-cycle top, and I got that. So I'm filled, and I'm happy to move up from there. And likewise, if price dips further, then I'll be happy to dollar cost average my way into wherever we go. In terms of a potential breakdown, obviously we need to stay above this mid-cycle top for this RS flip to hold. Most importantly is staying above the 21-week. Now, we've been talking about the 21-day. Most important to stay above this 21-week moving average for this shorter-term trend to stay intact. And ultimately, the 50-week moving average, which is where the kind of bottom of the trend is in terms of the local trend. We've had a couple of touches here that look solid. So those are the things that I'm looking at in terms of the technicals. On the fundamentals, we looked at the economic data, and of course the ETF story continues. Eric Backlund has put out an interesting post today about the ETFs performing, and got that over here on the Black Knox page on Twitter. Yeah, it's still Twitter. Let's see where that is. Thought I posted something on that earlier today. Maybe I did it on my page. This is pretty interesting. I think it's showing that here it is. iShares best performing ETF, hands down. What's he saying? Last 4 years, 1,800 ETFs have launched, and iBit is the most successful of all of them at 26 billion, and that's in less than a year. That's rather impressive. You can see Fidelity's Bitcoin. These are all Bitcoin ETFs here at the top of this list. Is really noteworthy. A bit surprised actually that the ETH ETF is coming into play. Those have been kind of a sleeper here for me. Well, for the market, I should say. As you can see, just a drastic contrast between what's happening with the Bitcoin ETF flows and the ETH ETF flows. A couple of positive days this week, but again, the numbers are not impressive at all, in my opinion. So there's that. Moving forward, again, we look to FireCharts. The fact that whales were selling most of the day and really started buying after the economic data, this is just a bit of a knee-jerk reaction, I guess, but this wasn't buying necessarily off of the support test, because you can see here off the support test, it was they bought and then they sold the rip and started selling again, or continued to sell. They didn't actually start buying until this morning when we got that economic data. So in terms of when are we going to see a breakout above this 70K and into that 72K level, I saw some posts earlier saying, gosh, does 70K and 72K look juicy right now? Well, I mean, technically we'd like to see it happen, no doubt about it, but you have to pay attention to what's happening here. Like, this is not any better than it was on Monday when we nosed up here, right? In fact, you can see here, you can see a little contrast here. That was what I was showing you on the shorter time frame chart, where we can see that there's actually more ask liquidity coming in to this 70K level. So what's it going to take? And this is why I love watching the order book. Seeing bids move up like this is a positive sign. We've got plenty of instances where that's used to just simply herd liquidity, like we saw last week. But we have to see some erosion at this level. And whether that means that they start lobbing asks down lower to get filled and start to erode the 46 million that's sitting right here at this level, or they start floating up higher to take advantage of the sentiment the price is going to go up. All of that remains to be seen. And with, like I said, a weekly close coming, a monthly close right around the corner, and the election, I'm not I'm not convinced that we're going to break this before the election. This put a little bit of hopium in every bull's mind, and made me question whether or not we would indeed break it before the election. And we don't have any evidence of that, right? So I'm not going to say with a hard, definitive answer, because nobody knows. I can't say that, hey, this is going to happen before the election, or it's not going to happen before the election. I don't expect it to, but if it happens, hey, I'm good with that. I'm good with going with making that move, right? I just think it's a tall order to expect that to happen very quickly, and I think it's even healthier. Believe it or not, as long as we've been in this consolidation mode, I think it's healthier that we establish and validate this RS flip here, and this RS flip here at the 21 week, this RS flip here at the 2021 mid-cycle top, which is also correlated with the 21 day, and then we can take out the 69. RS flip this at 69K, which was the 2021 top, and then start going after these other higher highs here, right? In the meantime, we're going to watch the candle charts and make sure that this local trend of higher highs and higher lows continues. Obviously, any change to that, a lower low would not be good. And as long as that lower low stays above this double bottom area, I think we're in good shape. The trend stays intact. If things really get nasty, we get a black swan and things break down to this trend line, I'm prepared to buy it, and I am happy to see that serve as a foundation for the big move up. Let me take out the trend precognition signal so you got a good idea of what that looks like here, right? We've had multiple touches here. This is back all the way back to the FTX crash in 2022. We had another retest of it here in October when things were consolidating around that 25K range. And this is really, this is a year ago now when the first real big move, validated move, started to climb out of this consolidation, and that's obviously the run that we've had so far over the past year. So I'm liking the strength that I'm seeing in the charts, but I am not going to allow it to fool me. I want to see a consolidation and ultimately an RS flip at 2020 at the 2021 top before I have any thoughts of a sustainable move past this 72K level and past this existing all-time high into new all-time high territory. Time for patience, my friends. Absolutely time for patience.